Kill the power to the external servers, sever the corporate VPN, and patch your terminal directly into this encrypted darknet feed. You are listening to the confessions of a rogue Wall Street quantitative engineer, and what I am about to leak will permanently alter your perception of the global cryptocurrency markets. Welcome to the machine. The headline flashing across every retail trading desk in the world today reads, "Breaking XRP signals a massive move, crypto market on alert." But the civilians staring at their smartphone applications have absolutely no idea what kind of move is actually being mathematically engineered. They are completely mesmerized by the spot price of XRP, which is currently chained to the $1.38 level like a prisoner. They see the red candles and feel a crushing wave of biological panic, assuming the asset is actively bleeding out. But I wrote the very algorithms that are causing that exact panic, and I am telling you right now, the entire retail market is being systematically hunted. The massive move that the technical analysts are desperately trying to predict is not a natural market fluctuation. It is a highly coordinated algorithmic supply squeeze designed by the largest high-frequency trading desks on the planet. We are intentionally utilizing the perpetual futures markets to spoof massive sell orders, fabricating a dense, impenetrable ceiling of artificial resistance. We drive the funding rates into negative territory to manufacture the perfect illusion of a catastrophic bear market. Why? Because the multi-billion-dollar sovereign asset managers commanding the United States spot exchange traded funds need to fill their deeply empty vaults before the regulatory floodgates officially open. They cannot simply place a billion-dollar market buy order on a public exchange like Coinbase. Doing so would instantly detonate the spot price and destroy their carefully calculated acquisition margins. Instead, they hired engineers like me to build high-frequency suppression bots. We suppress the public price, trigger the automated stop-loss limits of over-leveraged retail day traders, and force them to liquidate their physical digital assets at a severe wholesale discount. The moment a retail trader folds their hand in pure exhaustion, our dark pool liquidity vacuums instantly absorb those discarded tokens and route them into heavily fortified institutional cold storage. We are legally stealing your generational wealth. You must disable your emotions entirely and realize that the current price is a weaponized mathematical illusion. The pressure is actively building behind the dam, and the retail sector is completely blind to the true supply metrics. The massive move is an institutional, violently upward repricing. Wake up. Let us transition deeper into the mainframe and examine the raw, unfiltered data metrics that my former employers are desperately trying to keep hidden from the public retail interfaces. If you want to understand the sheer magnitude of the impending massive move, you have to look at the exact velocity of capital flowing through the enterprise settlement layers. The mainstream financial press is aggressively broadcasting a reused narrative that institutional capital has completely abandoned the digital asset ecosystem due to macroeconomic headwinds. That is a perfectly executed corporate lie. While the public retail price remains artificially paralyzed, the United States spot XRP exchange-traded funds have quietly achieved an absolutely staggering milestone. The financial leviathans commanding these heavily regulated investment vehicles, entities like Bitwise, Canary, and Franklin Templeton, have successfully sequestered over $1.3 billion in physical cryptographic assets. But that is merely the tip of the institutional spear. You must synthesize this covert accumulation with the explosive scaling of Ripple's enterprise stablecoin infrastructure. In the span of just a few months, the RLUSD network capitalization has violently expanded past the $1.5 billion threshold. Retail observers mistakenly view stablecoins as a structural threat to the native token, which fundamentally ignores the underlying physics of the network's source code. The XRP ledger is the primary high-speed routing engine, and RLUSD is an enterprise application running directly on top of it. In order to process these massive stablecoin transactions across international banking corridors, the network absolutely requires the automated combustion of XRP as cryptographic gas. As Fortune 500 corporations aggressively integrate RLUSD into their treasury management systems to escape the extreme friction and high costs of legacy banking, the mechanical burn rate of the native token will accelerate exponentially. This creates an unyielding mathematical demand vector that operates completely independent of retail sentiment or manipulated candlestick charts. The institutional heavyweights are executing multi-million-dollar cross-border payroll distributions utilizing this precise infrastructure. Every single time they interact with the ledger, a fraction of the circulating supply is permanently incinerated. The smart money is actively hoarding the physical float, while the network simultaneously burns the remaining reserves. This is the exact cryptographic formula for an unprecedented supply shock. The data is absolutely clear. The algorithmic trap is officially set. We must now bypass the domestic firewalls and elevate our surveillance to the global macroeconomic layer. because the massive move currently being signaled by the network is not restricted to the United States. The quantitative models I helped design strictly analyze geopolitical capital flows, and the integrations currently happening behind closed doors are absolutely terrifying to the legacy banking cartels. While the retail day traders are crying over the $1.38 suppression zone, the supreme architects of the global financial system are quietly plugging their multi-trillion-dollar mainframes directly into the XRP ledger. We recently intercepted verified intelligence confirming that Ripple Prime has been officially integrated into the National Securities Clearing Corporation directory under the mighty Depository Trust and Clearing Corporation. The DTCC is the absolute beating heart of the United States traditional equity settlement machinery. By establishing a permanent executing broker code for over-the-counter products, Ripple has effectively hardwired their decentralized infrastructure into the central nervous system of Wall Street. But the scope of this institutional takeover extends far beyond American jurisdiction. We are tracking a colossal European expansion that the algorithmic suppression bots are desperately trying to conceal from the public sentiment gauges. Societe Generale, a titanic French financial institution commanding over $1.8 trillion in global assets, has officially deployed its MyCA-compliant Euro stablecoin directly onto the Ripple infrastructure. Furthermore, Japanese banking leviathan SBI Holdings has launched a massive blockchain-based corporate bond specifically designed to reward traditional retail investors with physical XRP. When trillion-dollar sovereign banking entities voluntarily integrate a decentralized ledger into their core operational frameworks to settle corporate bonds and stablecoin transfers, it mathematically guarantees a tidal wave of future utility volume. The old financial system is actively dying, collapsing under the weight of its own inflationary debt spirals, and Ripple is seamlessly installing the cryptographic upgrade. The retail market is hopelessly paralyzed by the short-term algorithmic price manipulation, utterly failing to comprehend that the largest banks on the planet are locking the foundational infrastructure into place right now. The global convergence is happening in real time. Do not be blinded by the malicious code. See the absolute truth. Initiate the final decryption sequence and download this strategic execution protocol directly into your personal hardware matrix, because recognizing the algorithmic manipulation without a highly structured exit strategy is absolute financial suicide. We have empirically proven the massive DTCC institutional integration, the billion-dollar whale accumulation hiding within the dark pools, the exponential utility growth of the RLUSD stablecoin engine, and the colossal international banking integrations. So what is the ultimate mathematical destination of this massive move when the algorithmic suppression is finally deactivated? Highly classified risk assessments, continuously refined by elite quantitative analysts at Tier 1 institutions like Standard Chartered Bank, have established a mathematically grounded baseline target of $8 per token for the conclusion of this specific macroeconomic cycle. To the uninitiated retail gambler, currently psychologically paralyzed by the $1.38 artificial price ceiling, an $8 projection sounds like impossible science fiction. But to the rogue engineer who understands the absolute certainty of a violently constricting supply curve colliding head-on with exponential institutional utility bandwidth, an $8 valuation is merely a conservative stepping stone. However, you cannot successfully navigate this high-stakes digital wealth transition without a ruthlessly disciplined, emotionless framework. Human greed is the ultimate vulnerability in any trading operation. I strictly mandate the immediate implementation of an automated execution strategy known as the Thirds Protocol. When the network price violently shatters the historical all-time high resistance parameter of $3.84, you must automatically execute a sell order for exactly 33% of your holdings. This unemotional maneuver secures a complete recovery of your initial capital deployment, instantly transforming the remainder of your digital portfolio into pure, stress-free profit. The secondary operational tranche is programmed to ride the algorithmic volatility toward the $8 institutional target zone, serving as your primary mechanism for total financial liberation from the legacy fiat matrix. The final tertiary portion must be securely encrypted and locked in deep cold storage for the ultimate long-term macro play, anticipating the network's final integration as the undisputed bedrock of global settlement. Secure your private cryptographic keys offline immediately using hardware authentication. The legacy institutions are deploying sophisticated phishing malware designed to completely drain vulnerable retail wallets right before the structural breakout occurs. Trust the raw immutable blockchain data, execute your strategy flawlessly, and beat the machine. End transmission.